Hello everyone, welcome to the trade recap for the week of January 17th. I hope you guys had an amazing long weekend. We're going to jump into a ton of plays, so sit tight. Alright, the first play happened on January 18th, and this was TKLF brand new IPO and also a halter panic. As you can see, it opened here, actually opened in the 43s, had a panic right here. This was a little too liquid, a little too soon in the day, so I avoided it. Had a decent bounce, then I had a secondary panic all the way here, and this is where I was dip buying. So this panic here was down 69.8% from the peak, and then it went on to bounce 190% to the 36s right there. That is incredible. That is incredible. My target on this one was 61%, but I got a good chunk of the move. I didn't get the meat of the move, but I got a good chunk, so very happy with the trade. And later in the week it turned out to be a Chinese scam pump, so it was a good trade. I think it being an IPO definitely helped it out for sure. On to the next one. So this one actually happened the same day. This was DWAC. It's back again. DWAC was a former SUPERNOVA, and this was another multi-month breakout. This time it was over this high right here, over 77.5. So buying it in the morning when it was breaking this level above 77.5, that was your entry right there. So that was the entry, and I don't know if I actually ended up playing this right. I think I actually waited just because I was being overly disciplined. However, after the day's close, I ended up buying a lot of shares here, and I sold into a gap up the following morning. This was a very good trade, and the key here really was the volume. Because it has a lot of volume, I was able to take a good amount of size and anticipate a fairly solid gap up the following day. I think gapped up into 92-ish. That was a really good trade. Next stock we have, this is the following day on the 19th. Now this is an OTC morning panic, one of our favorites. This stock was very interesting because it actually gapped down, and last time it gapped down in early December, it had a really big bounce. So it just took the high from the previous day, which was 580 as the top, and then it took the 425 panic low as the bottom. I actually have a video of this chart forming in real time. You can watch it. I'll link it down below. So NLST had a panic of 27.2%. My target was 15.2%. So it was exiting in the high 480s, around 490. But it actually went on to bounce 22.1%. So I underestimated it by a fair amount, but that's no issue. We're just taking the meat of the move here. I didn't play the bounce chart just because it didn't bounce enough, to be honest. Okay, the next trade here is the same day, and it is the triple Q now. I usually don't trade the triple Q. This is the NASDAQ, but this was an amazing trend crack. So if you look at the trend here, you could see it's been up trading for a long time. Since March 2020, it's been holding all the moving averages. The 50 is a green one, 100-day moving average is yellow, 200-day moving average is red. Been holding all of these, and every time I dip below the 100-day moving average, the yellow one pops right back up. So I was using that as an indicator of it not popping back up as a sign of strong weakness, and from then on out I was aiming for 340 as my target, and that got hit in a few days. I took a bunch of positions. I was short the actual triple Q. I had puts on triple Q. I took the S triple Q long, which is inverse triple Q ETF. I also took UVXY. Now I can't show you UVXY here on StocksToTrade, but I can tell you that it really spiked after I bought it. It went from 13 all the way to 20. I think it hit 21, high 21s at the bottom, which is that green candle you see there. So I was just shorting the overall market just because that's what the technicals told me to do, and I took a lot of size. I risked about half my account on this kind of trade, but I knew it had a very high odd of happening, and it had a very, very big reward. So the risk reward was there too. I factor in everything to make my risk be strictly $5,000, which is half of my small account pretty much. Now the 369 level right there, that is the strong support. You can see it bounced off that when it dipped below the 100-day moving average the first time, bounced over, failed to reclaim the 50-day moving average, and then right when it cracked below, I sold literally all my long investments, long positions, every single one, and I took a massive size short on the triple Qs using SQQQ and QQQ puts, and I also bought a lot of UVXY, and I learned a lot of this from trading in 2020 where I took big position on TVIX. We don't have TVIX anymore, but we do have UVXY, although it is less volatile. It still works really well. Take a bigger position in that, and I think I was able to trade it well just because I already had that experience and I didn't let myself get reckless or have no defined risk. So I had my risk set, everything was covered. If it went wrong, I had an exit strategy. The next stock happened the same day, and it's NVDA, also a support crack short. You can see it had the support there in the 256 area, and once that red day snapped, it doesn't have too much support all the way to around 240. Now, I didn't think it would get to 240 that quick, but I was aiming for that 250 level or so. Very, very nice setup, and that's just what you got to do in bear markets. When the market was falling as hard as it was with that key support snap that you saw in the triple Q, that was also the time to get aggressive on similar stocks in the tech sector. So that's why I went heavy on NVIDIA this day, just because the overall market was tanking hard. So that has a big effect on stocks, that just like big stocks in general. The next setup is PTON, and this happened on January 20th, the day after, and this is a listed halter panic. As you can see, it just had red candle after red candle after red candle on some bad news that was released. The top there was around 32 and the bottom there was around 23.25. So I just waited for the red candles and halts to stop and for it to make that blow off volume spike. You can see at the bottom of the blow off volume spike is right below the bottom candle, and I'm gonna draw a trend line right here just to show you. Once it crosses this trend line here, that's when I start to consider getting in, once it crosses above that. So we zoom in here, you can see it bottoms, it puts in that next green candle, and then it starts coming back up again, and once it puts in a higher low right here, that's where I'm getting in right there. I need all those confirmation points to tell me to get in, otherwise it's not a trade. I need every single one. Then I was exiting right about there, so the panic here was 28.8%, target was 13.3, and the bounce here was 17.4%. So I nailed that exit also. I was gonna do a bounce short, but it just didn't bounce into the high 27s like I wanted, so just didn't play it. It's okay. I have a very strict criteria for that so that I'm able to be profitable in the long term. And finally, the last trade we're gonna look at is IWM on the same day as PTON, and this is a support crack short. So IWM was forming this amazing support level in the 250 area, or sorry, it was forming an amazing support level in the 205 area, and the very day when it cracked below the 205 area, that blue line right here, that's where I was getting short heavily. I was actually trading IWM puts for overnight, and I was loading up right when I crossed that blue line. This is a key support crack. You can see it's been forming all year, so it's a very important level. Once it gets cracked, the downside could be down to the 180s. It's the same story as the triple Qs. IWM follows small caps. Small caps weren't performing as well this year as the NASDAQ or the S&P, so poor performance plus a downtrend in market, we can expect the IWM to panic more than the other indices. Welcome to the journaling portion for the trade recap. Week of January 17th, we're going to jump right into the trade. There were a lot of trades this week. So, starting off, this was an AMC support crack short. Now, with this one, it was really a continuation of a support crack just because AMC was already below support, and the day really short it was the day before of my actual short. But this one worked out. I was chasing a bit. Even though it worked out, it's not not really what I want to be doing. So I'm just gonna label it under not my setup. Here we go. And then this one was puts trade, similar to the short setup. You know, ultimately it was aiming for 15. I thought this could really break down really quickly, and I gotta remember that if it doesn't hit my target, that's okay. I can't just continue chasing and trying to show a weakness thinking that it has to get to 15, because it doesn't. So that's why I'm gonna put this under not my setup, because obviously I chased it, and I'm going to label it as chasing also because I did chase that. Second trade, or second ticker of the day, TKLF. This was a brand new IPO, very volatile. What you don't see is the halts, but I went over that during the trade recap earlier. Got in here at the bottom, got in top, perfect. You don't see the halts though, keep that in mind. This was pretty liquid IPO. Great trade though. These haven't been happening a lot, so when they happen, it's amazing to see. I think it bounced over almost 200% from that low, so there's a lot of potential on these setups. Let's assign it. This one's a halt down, so let's find that. And it's also a SUPERNOVA HALTER panic, so that's what I call him. Sage panic. Yep, you know, technically it was a SUPERNOVA HALTER secondary panic. I do have a label for that, but I don't really track that anymore. It kind of has old data associated with that tag. Okay, the next trade after that happened on the same day. AMC also, so this was a long play. First we're gonna look at the call. Okay, pretty good. Now again, I know what the chart looks like the full chart associated with this looks like, and what I was trying to do, and even though it was a nice dip, a nice panic, it wasn't good enough for me. You know, it wasn't good enough to trade. It did work out, however, this is not an A setup, it's not an A plus setup, probably a B minus or a C setup, to be honest. Like, it did work out, but what are the odds? Is it even worth the time to play it? So I'm gonna put this under not my setup. Okay, the next one is DWAC. This one was a proper setup, multi-month breakout on volume. This one was mint. This one was really nice. So this would be the type of proper play that I enjoy playing. Former runner, multi-month breakout, not necessarily the volume it had in October of last year, far less, but when it gets volume, it still has nice moves. Not as nice as a horse round though. So now we're moving on to the 19th, I believe. 19th of January. Again, you know, I was really trying hard for this to break down and go to 16. Really stubborn here. So I am going to label this as not my setup again, just because it really wasn't. I was obsessed with this AMC going to 15. I was obsessed with AMC going to 15. And then after that, an LST. Now this was a really nice morning panic actually. Yeah, I did really good here. Nice. Now this is an example of an A plus trade. Perfect. I don't know how to play it. Looks good. Tradable. Yeah, that's right up my alley. I believe this is under OTC. Yeah, there we go. That one was really nice. And again with the AMC, this time on the puts again, I believe. Trying to get more puts again. Like, I'm just trying too hard. I'm trying way too hard on this. Okay, I'm putting this under not my setup because it's not. Now, IMTE, this was starting to play these ones again. I'm starting to play these a little more. I would categorize this as a pump dropping. That's what I would categorize it as. And I took a paper cut on this one. It worked out later, started to work out, but this was the original paper cut. It went red, but then it just squeezed back to green, squeezed through red green. So just annoying. It's tough to trade these because you have to kind of anticipate where it's gonna go. You got to be really good with cutting losses. Okay, now DWAC again. So on this one, this was a first red day short. However, I wanted the stock to completely fall apart, but it wasn't extended enough. So it was underextended. I was chasing it again. I'm not really going to categorize this. I'm just going to put it under not my setup. Also put that I was chasing it and that I entered too late. Got in too late. Same thing as, okay. So now we move on to triple Q. So I believe these are puts. They're not closed yet. Let's see where we got in them. I think it doesn't show a chart because it's closed. I think it doesn't show a chart because the trade is still open. So that's fine. 360 puts expiring February 11th. Very nice. And as you recall, going over the technicals, the reason we're showing the triple Q is the technical support crack. Very major. The first technical support crack since 2020. So that is very significant. I'm just putting these trades back into the order they were. And okay, the next one we're gonna look at is UVXY calls. Now, I was really aggressive and they also didn't do the calculation right. So instead of buying calls in the 20s, these are monthly calls for UVXY, the volatility tracker. I remember when it was TVIX, and TVIX moved a lot more percentages based on the VIX, but I digress. UVIX is what we have now. TVIX got delisted. I did the calculations wrong and I was buying $38 calls, but after I redid them, I realized I should have been buying $20 calls. So what I did is I just kept these $38 calls and then I sold them. What I did is I held these $38 calls and I sold them into pops. So the average entry is 64 cents. Average exit is $1. I had a bunch of them. What I wish I did was get the right UVXY calls. However, I just ended up buying UVXY because it was just too confusing for me. Volatility is just tough to measure properly. So, judging where it's going to go, you also have to factor in the time UVXY takes to get there. And then also there's time decay on UVXY comparative to the index you're looking at. So for example, the triple Qs, if a couple days pass and the triple Qs hit the same level, the UVXY isn't going to be at that price it was before. The prices don't match. There is some type of time decay because as days go by and the price doesn't really change that much, obviously there's less volatility. And then on top of that, when you're buying options, you have to factor in the time decay of the actual options too. So it was just too confusing for me, so I just gave up on getting the proper calls. I just bought a lot of UVXY, and technically it's not a stock, it's an ETF, UVXY shares. So I'm going to put these under support crack short, and then I'm going to also put them under, I'm going to make a new category for them. I'm going to put them under market technical breakdown. So I'm just going to make a new category for them. Nice. Then I'm going to apply the same setup to that. There we go. Boom, boom. Okay. Same day. I made a lot of trades this week. Holy cow. So same day NVDA. This was 40 puts. Now this one also support crack short. Didn't work out. However, I think I just held it too long and there was time decay on that. So we're going to put that under support crack short. Here we go. Now UVXY. I'm still holding these, by the way. I'm still holding these. This is what I was talking about buying the actual shares of UVXY. So this is a swing trade that's still open. I'm going to put this under technical breakdown. Okay, and then on the 20th we have AMC again. I'm just trying too hard here. Trying way too hard to make something happen. That's not happening. Let's get that straight. Let's get that straight. The AMC massive panic short to 15 is not gonna happen. So it's kind of awkward having so many plays that aren't actually my setup. That is not good. Okay, the next one is a NVDA. Now this one is a legitimate support crack short. Like this is a real one. That question. Let's get it. Now this was the real support crack short. Ended up messing it up somehow. Support crack. Where are you? Support crack right there. And then DATS, this one small loss, which is good. That is really good. But what's bad is that I should have just ignored it. Don't want to ignore something, make it a small loss, right? Like DWAC. Man, I had no business trading DWAC on January 20th. I had no business. What is this? I bought 10. What is this even? 10 shares? I bought 10 shares and bought 10 shares at 84. Oh, and I immediately exited because I was like, that's a bad idea. Actually, this might be like a fat finger mistake, to be honest, where I like accidentally entered it, but I don't care. This is still not my setup. No excuses, because I actually did trade it right after. Okay, let's look at more DWAC. Yeah, the 20th, like it was setting up, sure, but not in a way that is my setup, so not something I should have been doing. Just this one and this one, and then we're gonna check out DATS again. We'll check it out. out, but I have a feeling it's not really my setup. So it's really important to recognize when you are trading things that you should be trading and when you're not, because it's just very humbling. Because you have to realize, even if you're making money, you can still improve. This is what the main focus of having a trading journal is. It's not just if you're losing and you can't find consistency. You use it when you're consistent to make yourself better, more consistent. When trading gets slow, the market gets slower, you're able to play defensive mode more because you recognize what mistakes you tend to make. So something like DATS, right? It should never happen. Like, I should have never traded it. Doesn't matter which market we're in, up market, down market, doesn't matter. It's still not my setup. Now, obviously, all these little shitty trades on my setup can get obscured by the big winners, but that's not always going to happen. There's not always going to be big winners. So PTON, now this was a beautiful SUPERNOVA halter panic. I've talked about it enough already. So I played both the call on it and bought actual shares. Let's see what 25 strike, and I exited 40% return. Not bad. I thought with a bounce like that it would be bigger return on the options. Return 37%. Let's compare that to the shares. Still better. It's really tough to master dip buying options when a stock is panicking too. I don't think I've mastered it myself, but I'm getting there. This is a rare instance we see this happen on a listed stock. Super rare, but I love that it happens. That means more bounce potential, although we didn't see it that day, probably because the market was tanking, to be fair. So it looks like I ended up getting back into NVIDIA on a support crack after getting stopped out. So here we go, support crack short. Here we go, boom, NVDA. And then IWM is market technical breakdown, and then BITO also. Although, to be fair, that was a crook put that I would have totally missed if it wasn't for Mark Crook. So I'm gonna label it as a crook put. Support crack short, also a crook. Very cool. And after hours on January 20th, Netflix totally broke down. Did buy it like a madman. Obviously, took some losses. I would describe this as a little embarrassing how hard I tried to buy it. But between the call options and the stock, I made some money. I don't know how much, probably like $400 overall. Not all of these were dip buys. One of them was a reversal where I flipped biases only to have my puts get stopped out after my calls got stopped out. I know it's a dangerous game, I am aware. But which one was it? Let's find out. Yeah, you know what? These were the puts right here. These were the puts. I'm gonna label that. Where are you? Oh, there you are. See, this was just a bad trade. Come on, I'm chasing down a stock that's already been hammered so much. Nah. The only reason I decided to flip my bias from long to short and flip from calls to puts is because somebody in the chat room was doing that, and I know I shouldn't do that. So there's 1 loss, 2 losses, 3 losses, flip biases, and then these ones it actually works out. So overtraded, I will add that as a mistake, because there's no way I should have been trading it that much. Because now, what I'm doing is I'm buying the stock and buying the options a lot of the times, especially on panics, because I don't know which one's going to do better. So I split my risk in half and then I do both just to see how it plays out, because I don't want to just do options on these panic plays, and because I don't have enough experience with using calls to dip buy just yet. I will soon, so I do 50-50 right now, but in the future, probably in a year or two, I'll be doing either exclusively calls or exclusively stock. Just right now I'm experimenting a bit. Okay, let's look at this one. Come on, load. Was this calls? Yeah, this was calls. Why was it a loss though? Strike 420. No, that's why it was a loss. No, it would have been a gain. I just didn't want to hold it for too long. Okay, I get it. But yeah, I would say after like this trade, now I'm over trading. All right, thankfully it worked. However, can't deny that I was over trading. Boom, There you go. And then we finally have more support crack shorts on the 21st. And I believe that was just an overnight swing, just based on how the markets were looking at the time. Okay, last two trades. Now these weren't support crack shorts. They were actually, okay, last two trades. Now these weren't actually support crack shorts. These were just market technical breakdowns. So let me add that to it. Here we go. So yes, I was chasing these, but they were closing very, very weak. So that's the reason why I wanted to swing those into the weekend. That's the only reason. That's all. Okay, so that wraps up the Tradersync part, and it wraps up the weekly recap. I will catch you next week. If you like this video, leave a like. Take care, guys. Bye bye.